Welcome back to the Dividend Diplomats YouTube channel. You've got Bert the Herd over here, and you know you're rolling with Lanny, the Dividend Diplomats. And we can't wait to talk to you about finally an undervalued dividend growth stock potentially to buy right now.
We are very excited to talk about this stock. We've learned a lot about it, but before we start talking about it, before we share this company with you, smash that subscribe button. Give us a thumbs up. We're cruising to 10,000 subscribers. You heard us talk enough about it. You know what's coming when we hit 10K, so help us get there. We are asking you. Boom. But now, let's dive in. Let's roll up our sleeves. It's time for an undervalued dividend stock analysis.
All right, guys, we're here getting closer to the end of May. We're recording this video here on May 22nd, so everything's going to be as of May 21st. The market is still flying high. It is still so hard to find an undervalued dividend stock right now to buy.
That is what I think is so fascinating, Lanny.
It's just hard.
It even with on your days.
Market out there.
Yeah, last week we even had 3 consecutive down days. I haven't seen that many red days in a row since probably right around the pandemic.
Bloody Mary.
But still, as I open up my brokerage account, I just didn't find that many great undervalued dividend stocks. Stocks are still expensive.
They're still expensive. The S&P 500 is still at almost 4,200. Yeah, they may have had a couple down days during the week, but guess what? They're not really down that much over the course of the week.
No, that's what's crazy. It just continues to increase and trend upwards as you want to see the stock market do. But that doesn't mean we're ever going to stop searching for undervalued dividend stocks to buy.
So that's what we came here to play today. We went through the Dividend Diplomats stock screener, focused on the 3 dividend metrics, one being the price to earnings ratio below the S&P 500. Currently that's at 40 plus times earnings. Going forward, it's in the mid 20 times earnings. We look at the dividend payout ratio, and Bert, what's that perfect payout ratio?
Well, in our metric, we look for dividend payout ratios under 60%, but that perfect payout ratio is 40% to 60%, because it is the perfect blend of a company taking its earnings and reinvesting it in the operations to continue growing those earnings and cash flow, but also paying us shareholders a very nice dividend.
It's like the Triple H and Shawn Michaels combo. You had the, the champion, plus you had somebody who was into the intercontinental, type of, championship. So,
yeah, and what's exciting is the company we're going to talk to you about today has a perfect payout ratio.
They just may. Teaser alert.
Yeah, well, I guess I kind of spoiled that teaser, didn't I?
Gosh, I should just give them a stunner right now. But not only do we look at the payout ratio, but we also look at that third metric, dividend growth. We're dividend growth investors, and you want to see that dividend income stream consistently grow year after year after year, and even during the tough times such as the global pandemic from COVID-19.
Yeah, and dividend growth is important because we want to one day be financially free and we want to live off of our dividend income. We are dividend growth investors for that reason. We want to make sure our income stream is growing to outpace inflation and the costs that increase over time too.
Oh, it's true. It's damn true.
Exactly. So when we do this, we're looking at the dividend growth history, how many years they've increased it, and that 5-year average dividend growth rate. Those are the 2 we really focus on.
All right, guys, it's time. What dividend stock is undervalued right now?
What is it?
Though we're in Ohio, we're taking our talents to Michigan right now.
That state up north, Lanny.
That state up north. Grand Rapids specifically, so not that other city.
Yeah, not Ann Arbor. We're not going there.
Not Bert's second favorite town.
I don't know if I'd call it my second favorite
town. He does
town.
not like that town.
Yeah, no.
If you're from Ann Arbor, we apologize ahead of time.
Yeah, Columbus is much better, and I'm a huge Buckeyes fan, but let's keep going. Let's get past that.
Turn this guy off because he'll keep going. So we're in Michigan. We're looking for an undervalued dividend stock. One that's increased not only for the last 5, maybe 10 years, but somebody that's increased for sure during this pandemic.
Yeah.
We finally found one. That company, I know I'm building up that anticipation. You may have never heard of this company, but they are undervalued. The dividend stock metrics are beautiful. beautiful.
Yeah, exactly.
This company is called SpartanNash. Ticker symbol SPTN.
This is not to be confused with the Spartan Warrior races, because that was my first thought when I saw this in the ticker.
Or Kevin Nash, big sexy.
Yeah, not either of those. It is SpartanNash, and they are a major player in the grocery and food distribution, and that is why we like them.
Right. They have more than 150 company-owned stores throughout, around 8 to 9 states. They supply more than 2,100 independent grocery stores. So if you're an independent grocery store, there's a chance that you are getting your product from SpartanNash.
And that's what makes this company unique and why they've been able to sustain that dividend growth. They have their own grocery store network. They are wholesale suppliers to other grocery store networks, and they also provide distribution to the military too. So those are three different sources of cash flow to help you pull different levers when one sector isn't doing as well.
So very heavily involved in the supply chain of grocery.
Yeah, and those, as we know, you're never going to stop needing groceries. No. And good times are bad. People still need to eat. They still need to shop and get them, keep themselves alive.
As the Cleveland Browns say, dogs got to eat.
Yeah.
So dogs got to eat on this dividend stock right here. Let's look at SpartanNash's Dividend Diplomat stock screening metrics. Currently, they're trading at a price of $20.31. Here's the funny part about this, is that they actually haven't even had that large or that much of a change in the last 12 months. You tell me, Bert, how many stocks have stayed almost relatively at the same price point over the last year?
2, 3. Not very many, that's for sure. I can't think of very many. So, that is insane to find one that is obviously trailing the S&P 500, obviously trailing a lot of your Vanguard funds and a lot of those other dividend stocks in your portfolio. That is a rare and unique fact.
And they're only up around $2.5. They're up about 10% or so, give or take, year to date. So again, last 12 months, not much has changed from a stock price. Year to date, a little bit of a price appreciation from just under 18 bucks up to where they're at with $20.31. Now, the forward analysts, Bert, what are they looking at right now?
$1.76. So you take that price, divide it by the earnings, that gives you a nice PE ratio of 11.54, which, as we mentioned earlier, the PE ratio for the market is significantly higher. So that's a huge discount compared to the market and a lot of those other companies we've been featuring on our YouTube channel recently.
Huge discount. And one thing I wanted to point out to everybody as well on the channel is that is also below Kroger, ticker symbol KR, and their price to earnings ratio.
Yeah, so Kroger is one of the other major players in the grocery sector, so that's a very decent and adequate comparison for this company.
Oh, Bert, I have to do a side question. Did you know we were recording a video about SpartanNash going into this?
No, I didn't.
Have you ever heard of SpartanNash?
No.
So, when we get in these next two metrics, you're going to love this stock. Bert, go over the dividend payout ratio metrics.
The dividend is 80 cents. You take that and you divide it by the 176. That gives you that perfect payout ratio that I was teasing earlier, that 45% payout ratio. So, hey, that's fantastic. Again, that's exactly what we want to see. You go through the dividend growth rate, that 5-year average dividend growth rate is 7.03%. So, hey, another fantastic dividend growth rate company right there, because as we talked about, some of the companies we featured in our last video were not anywhere near that.
No, yeah, if you saw those increases, you only had one over 7%, and that being Northrop. 7% average growth rate, I mean, you can't hate on that. Their last actually increase, though, because you're probably wondering, well, what did they do recently? Well, it wasn't that phenomenal. It was like a 4% increase.
Yeah.
Below their average, but probably right at inflation, to be honest.
Yeah, right there. So that's solid, though. I mean, hey, not every year is going to be above their average growth rate because you have to get to an average somehow, right?
And they've increased their dividend for about 10 years. And I don't really see them slowing down with the payout ratio like that.
No, they have plenty of room to continue growing it. So looking at that bonus metric, here's the kicker. This is probably what everyone wants to see. What is their dividend yield? Who cares? Who cares what the growth rate is? We want to see what percent are you going to get paid and how much is that going to hit your bank account. So Lanny, what is their dividend yield?
So the dividend yield, as we know with the S&P 500, is about 1.5%. Well, guess what? That dividend yield on SpartanNash, again, ticker symbol SPTN, the dividend yield is actually at 3.94%.
So look at that, an almost 4% dividend yield with a 7% average dividend growth rate.
Wow.
That's huge.
Wow.
That is huge. There aren't too many companies that are going to offer you that combination right now, trading at this low of a valuation.
What's interesting is they actually have similar metrics in a different industry to Pfizer.
Yeah.
When you actually look at it up and down.
Yeah, and that yield is definitely higher than Kroger, which we're talking about their competitors.
It is higher than Kroger.
So you're getting a competitor that is trading undervalued to Kroger with a perfect payout ratio, better dividend yield, and probably similar dividend growth.
Bert, I mean, is this stock going to be on your watch list?
For sure, it's going to be on my watch list, and I may buy because I'm looking to move some of the cash off to the sidelines, and it has been hard to find that stock that isn't Johnson & Johnson that I've been buying lately.
Right. I mean, in summary, again, a price to earnings ratio of 11.5, perfect payout ratio at 45%, 10 years of dividend growth at a rate of 7% with an almost 4% dividend yield for SpartanNash, ticker symbol SPTN.
So what about you, Lanny? You asked me, it's time to ask you.
I think this is a great stock that I could probably put in my wife's portfolio. I do have Kroger in mind, but I'd like to add SpartanNash to my wife's portfolio. This is a dividend stock that we're going to be buying probably starting the week of May 24th. Obviously, for all the viewers and investors out there, please do your own due diligence. We're not here to say what you should or shouldn't do.
Yes, and also keep an eye on this too. They haven't announced their June dividend yet. They pay at the end of the probably the last day of the quarter. It's a very tight turnaround, so they'll announce it in June with the next dividend date just right around the corner. So if you're going to want to capture the dividend by the end of June, if you're interested, make sure you start looking into it to make that investment decision before the middle of June.
Guys, there you have it. A dividend stock that's undervalued to buy right now in this stock market. You know, I know everybody's probably getting the queasiness from the crypto swings, plus all the volatility amongst with Tesla and Elon Musk. But here's something that's pretty stable from a grocery standpoint.
And that's what we like here. We enjoy watching the swings, laughing because we have that consistent growing dividend income stream.
Guys, who here already has SPTN, you know, SpartanNash in their company? Please let us know in the comments. If you've never heard of them, but you now like them after this video, let us know if this actually helped you.
Yeah, we're excited to see. And again, subscribe to our channel. Give the video a thumbs up if you haven't already. Please, again, almost at 10K.
Guys, this is Bert, The Hurt, and Lanny from the Dividend Diplomats.
Over and out.